YouTubes. Welcome. Good evening. It's morning, but whatever. It's morning for us. It might be afternoon for you. Good afternoon for you. Good morning to you, too.
Good morning to you. You either have to do it or I do. One of the two.
Dude, back off. I don't want any problems.
You don't want any problems. Nobody wants any problems. Nobody wants any problems, but we have problems. Why? Because the Fed spoke. Fed spoke yesterday. Fed, the notes came out, and it kind of a par. We thought it was going to be horrible, but it's not horrible. We got one more CPI, and I forget the other one, but there's another big reporting before the actual meeting of the Fed in March. And that's what they're really concerned about is inflation, and they're real clear on it.
What's up, Ryan?
And they also know, can I use my beacon score? Nope. So
I would rather use a bacon score.
Bacon. Ooh, is there a bacon?
Raise your hand if you love bacon.
Is there a bacon score? I want a bacon score. What's
up?
What's up, Ryan?
Was that what that means? Sup?
Yeah. Sup.
It's very breathy.
Hup. It's very breathy, dude. It's weird. Breathy. So, what are the rates today? 5.75 on a 15-year, 6.25 on a 30-year fixed. Fed came out and spoke, and so here I did some math on this, and the Vegas odds are starting to show. Here we go again, Andy the Goat. I did some math. So the Vegas odds are starting to show that we don't actually think the interest rate cut is going to happen until June. But in the latest Fed minutes, they're stating 4. It leans more to 4 cuts. Sometimes it was 3, sometimes it was 6, but now it looks like 4. So I did the math, and I'm like, okay, cool. There's not one Fed meeting per month. There's not. But when they hit solid. And if they're thinking 4 interest rate reductions, so if they say 3, and it's not one person that stands on it, because you'll never get the Fed to come out and say, we are cutting rates. They won't. They just don't say that until they do it. What they do say is, we believe we've reached the peak of the economic cycle, and we anticipate interest rate reductions in the next quarter, but the Fed remains open to adjustments. So we have one more CPI reporting, and then I forget the other one is, but we have 2 more big reports before the next meeting. And there's odds makers in Vegas. And the odds makers in Vegas used to believe that the cut was going to happen in March. And that's why the uncertainty went away, and we went from 250 basis point spread from the 10-year yield down to about 100 to 150 basis points, somewhere in the process. So the minute they said, hey, I don't know if things are gonna hit the economic forecast that we were hoping for by the March meeting. That's what they said. And then boom, the market responded. They said, holy smokes, we don't know if it's going to happen in March. And then boom, interest rate spiked 50 to 80. You said you saw a lender with 100 basis point spike. So that didn't change the 10-year yield. The 10-year yield's still there, but the uncertainty in the market started to creep in, and it responded by bringing the rates up.
Thoughts on purchasing a mobile home? CE?
Andy the Goat. Do you still have an active Series 7? It's not active anymore. No. Still involved in stocks. Still buy stocks. Still do. But I'm not an active stockbroker right now. What do we got? So thoughts on purchasing a mobile home?
Here's the thought. If that's what you want, it's good.
Yeah.
If you're looking for an investment opportunity, maybe not.
Mm-hmm.
If you're looking to flip it, maybe not. But I want to know what you're more thinking, because a mobile home, which we call manufactured homes, those are the ones that we finance. Mobile homes on wheels, you can move it around, you can hook it up to a truck, drag it around town, drag it across the country. Manufactured home on real estate is attached by a permanent foundation, so that thing's not going anywhere. Okay? So if you're purchasing a mobile home on wheels, you're going to be paying rent somewhere unless you buy the land and drive it on there. But if you buy one that's affixed to the earth, you're buying real estate, and we can absolutely finance that. It's not a finance everything because there's rules to it. It has to be built after 1976. Has to be on a permanent foundation.
What month in 76?
June.
Dude, you know that?
Built after June and after 76.
Wow, that's pretty
Ask
impressive.
me how I know.
That's pretty impressive.
So yeah,
That's
mobile
pretty
home,
impressive, yeah.
not a bad thing. It's a
Yeah.
manufactured home though. Make sure you call
Yeah.
it that, and ask the questions pointed. Like, what do you mean? Like, do you think it's a good idea? Do you think it's a good sturdy construction? Like, what are you thinking? Michael Chase.
Well, real quick, let me add one more thing. It's a category of financing. So if you're buying a home, not a mobile home, but a home that you're going to live in that's affixed to real estate, that's called real estate. And real estate is FHA, VA, USDA, Fannie Mae, Freddie Mac, conventional, a few others. But that's real estate. That's a method of financing. If you're financing a mobile home, that's a different vertical in financing. It's like automobiles. Automobiles, we don't do automobile loans. We also don't do mobile home loans. We do real estate loans, and if your modular is affixed to a permanent foundation via an engineering cert and a 433 and a few other things, then it is now classified as real estate. We can finance that. So I just want to add that to there so you can know that it's a different vertical. It's not a pro or con. Some people love mobile homes and paying space rent. Cool, good for you. That's a good thing.
Yeah, it's real estate's a different thing because like if you're gonna buy a house and there's a ceiling fan in the roof and then you finance it and then you move in and you realize the ceiling fan's gone, that's your ceiling fan. It's attached to the property. It's attached to the land. Same thing with the manufactured home. Connor.
All the way up, you missed up.
CE was asking questions,
There's some more up there. Okay, cool.
CE,
We appreciate
Michael
you.
Chase.
We're on Facebook, Instagram, TikTok, and YouTube. We appreciate you. DTI for HELOC. You go.
There really isn't one. And to be honest with you, when we build the files, it's not built the same. So we're not looking at DTI. So if you're not really reaching financially, it should be fine. If you are, if it's tight, then it's probably not going to work out. But the way they go off of, it's just like a credit card. Tell us how much you make. We're really not going to factor everything. We're just going to get an idea if you're overreaching or not. So it's a little tougher to answer that question. But give us a call. Let's have a verbal conversation. We can give you a little bit more data on your file.
Yeah, LTV is probably more important than DTI on that one. LTV, loan to value. So if you don't have a lot of equity in your house, it's harder to get a HELOC. But if you have a whole lot, then there's a. I know you do side by sides, 4-wheel loans, boats, etc.
Hell yeah, man!
Ryan,
what do you need, Ryan? Anything for Ryan?
Well, we call it a cash out refi, and then you buy your side by side, your boat, whatever you want. You can call it whatever you want. We have to call it real estate, conventional conforming, FHA, VA, USDA, blah blah blah.
Do we know CE?
I don't know. I hope we do. I don't know.
What's a rough estimate for an ADU?
2-bedroom, 1-bath in a Rialto area. Wow, CE Rialto. So, here's the thing with ADUs. I'm actually building an ADU right now.
Show me.
And it's crazy.
You're sitting right here right now.
It is crazy.
You're
It is
not building it right now?
It's crazy. Well, so when you start going down this path, there's like, hey, I can get something and put mother-in-law on it or rent it out. And you can rent out ADUs for a lot. And okay, cool. So I'm like, hey, I can build it cheap. But here's the catch. Oh, there's a loan that'll give you $40,000. What? $40,000? It's a half a loan. I'm like, okay, let me dig into this because I could always use a free $40,000. But when you look into it, you're like, hey, that free $40,000, you must use their general contractors. You must use this thing. And you must pay a manager of the whole situation. And the loan must be $200,000 or more. And I'm sitting there going, I don't think this is such a good deal after all. You're going to give me $40,000, but you're going to make it all back by paying all your people, greasing all the wheels to make it happen. Maybe it'll still happen, but I might have been able to do it for $100 instead of $200 with your $40,000 free. So ADU is a little rough, I guess. That's the best way to say it. So they go by square foot, but it's not always square foot. Because like, for instance, in the ADU that I'm building, because I pulled the permits after 2023, it has to have solar. It has to have solar. There's no question. It has to have solar. Because of the size of it, it has to have its own septic system. Where I'm at, it doesn't have septic. So I have to build a separate septic system, and that changes the cost per square foot. So it varies. I'd say if you can get away with $150,000, that's super dirt cheap. And you're probably going to be, dude, the banks want to finance it. They want to finance it. But they don't want to finance it for your benefit. They want to finance it for their benefit. And that's the catch to all this.
Borrow
anyway,
the money.
Moving on.
Yeah,
Dude, we got a lot of questions.
$250,000 is most common number I keep saying.
Yeah.
So I bought a home FHA. If I bought another property in the same city, is it 5% conventional?
Connor, all day long, all day long. The only time that the conventional guidelines kick in is that's the 3% down. There is a 3% conventional, and that's for a first-time homebuyer. And that means you haven't bought a house, you don't own a house, and you can get in with 3%. There's some rules on that. But 5% conventional all day long. You could buy a 4-unit, dude. 4-unit with a conventional right now.
And then rent out the old primary. Yeah.
Rent out the old primary.
So,
yeah.
Connor, that's actually the move. So
Yeah.
that 5% could be 10, 15, 20, 100, whatever, 50%. But yeah, you're going to go conventional, and you can't go FHA again. Ryan, can you get me a yacht if I live in it?
Ryan, you're fun.
Why does conventional charge higher interest than an FHA?
That's a good question. And the trick is they kind of don't. So here's the math in it. We're ready to math it out? Here's the math. Okay, cool. So let's just say I priced you today, and you have a really good FICO score, and your FHA came in at 5.5%. 5.5%. And your conventional came in at 6%. Which one sounds better? Well, FHA at 5.5%.
Bye, Jules.
But then, Jules left?
Yeah,
Dude,
Jules.
no,
Jules, we're in California, but
California.
we have in all 50 states.
All 50 states. So anyway, 5.5 and 6%. And it sounds like FHA is better. But when I tell you that there's a mandatory MI for the life of the loan of 0.55, and you add that 0.55 to that 5.5, you are now at 6.05. So your FHA net cost is 6.05. Your conventional cost is 6%. So they're kind of close. And if you have a really good FICO score, you're probably better off with conventional. FHA is designed to help somebody who hasn't gotten to a house. The guidelines are a little looser, and they will help you get into a house. So FHA is better for a first-time home buyer sometimes, most of the time. Because first-time home buyers don't have 800 credit score and $100,000 in a bank, and that's not usually the case. If you're an exceptional first-time home buyer, you'll probably land up with conventional.
Aaliyah pulled my FICO scores, and all three of them were different, but range between 545, 602. Will I not qualify? Question mark.
Dude, not qualify? That's a double negative. Double negatives hurt my brain.
Okay,
so anyway, will I qualify?
What's your middle score?
Well, yeah, what's your mid? Because if you said my FICO's 545, I'd say, no, you don't qualify. If you said it's 602, I'd say, yeah, you qualify. Why? Because FHA starting qualification is 580. And then the question is, who pulled it? If you had it pulled by an auto dealer, that doesn't matter for us. It doesn't even count. Won't even factor in. We don't care. If you had it pulled by a licensed loan officer, that's going to be the real credit score for getting a home.
So I have $10K in student loans from 2020, but waiting for Biden to remove. What's your advice? I make $270,000, which I can easily pay it off. Yeah. You don't want to do that, man. That's going to be the move. Just pay it off.
Yeah. If you're thinking, so
they're dangling the carrot for your votes.
The student loan is junk, man. Their student loan forgiveness, it's junk. Because if you actually dig into it, they're going to say, hey, we're about to forgive $1 billion worth of debt. What's the criteria? Oh, you have to have been paying on it for 20 years. I think it's 10 years. You have to have been paying on it for 10 years, and it didn't resolve the entire amount of the debt within 10 years. Then the government will step in and go, yeah, you've been paying for 10 years. We'll forgive the rest. That is the guideline for what it is. But they don't tell you that on the news. They're like, Biden's thinking about forgiving a whole bunch of loans, student loans, and it's not really what it is. You have to dig into it and figure out what it really is, and it's just politics, man. It's ugly, but it's politics. It's ugly, but it's politics.
You're probably netting $20,000 a month.
Yeah.
So peel off one of those for 10 months and you're done. I mean, it's easy, man. It's easy. Christian Wild, thoughts on a file for underwriting, and so thoughts on a file that goes into underwriting, and then they're requesting a second review.
Ooh.
So thoughts on that.
Okay, so my first thought is the appraisal. There was something wrong with that appraisal, and something looked fishy in that situation. So they're asking for a desk review. That's my first
Maybe.
thought on it. Yeah,
Maybe.
that's my first thought. What's yours?
It's getting escalated. So it went to an underwriter, and the underwriter's like, I'm not too sure on this, so I got to escalate it to the person that can make the decision on that.
Now, why would that happen? We had one last month where they said...
Happens often, by the way.
Yeah, it happens
It's
often.
not unnormal.
We're like, hey, this is an uncle twice removed. And the underwriter said, well, we're not really sure that's a relative. So we can't, classify them as a relative. So they kind of came back and said, hey, yeah, that's not a relative. It's an uncle twice removed. So then we pulled the guidelines and we said, okay, can you exactly show us where that uncle twice removed is not a relative? And they said, well, because it's twice removed, it's not really a relative. So we escalated. In our world, it's called CPM. So we escalated to a CPM. We showed the guidelines because you do have to have the guidelines.
What CPM stands for?
Credit Policy Manager. So we escalated to a CPM. The CPM said, yeah, this is wide enough where this twice removed uncle would set in. The CPM said, hey, listen, I'm sanctioning this one piece. Move forward. And we funded the loan.
Yeah.
So that happens.
Let me give you a clear idea of what he's saying. So we're not the decision maker. We're not the one that says approved, fund the loan. We're the ones who package it, understand the guidelines, and then like Lee said, when an underwriter says that doesn't work and that's not approved, Lee steps in and goes, yes, it is, and here's why. So we are the ones who set it up and then fight and push against them because we know the guidelines just as well as them, sometimes better.
Yeah. And by the way, we fight guidelines. Because we're in the sales side of it, and we know how to spin it to go, that is an uncle, damn it, it is. Look, it's an uncle. Damn it, damn it, damn it. And then the guidelines, and the guideline doesn't say that's not an uncle. I'm like, if it doesn't say it's not an uncle, then tie goes to the runner. We're the runner. We win.
Boom.
And the CPM said, yes, we agree with you, and good to go.
Okay. Do I need to pay it off before looking into a home? This is the one
I
about
think the
student
student
loans.
loans. No.
Not that income level.
$10,000, even if we use the 1% rule, there's a 1% rule that says we have to take the aggregate amount, and the worst case scenario is 1%. And I have to count that against you monthly. So that's $100. So I'd be going, hey, I got to count $100 against you. Or there's certain loans where I can do 50 basis points, which means $50 against you. Or if you're deferred, certain loans I can even not include it if you're deferred or currently still in college. So there's a lot of things, but don't let it slow you down. Don't let it slow you down.
Michael Chase, I bought a house for $160,000 and it appraised for $260,000. Have credit card debt of 60 G's. So this is the one that was asking for the HELOC. So in this situation, I'd probably get a second. I mean, just because of the rate's going to be better.
And it depends on when you bought the house, because if you're sitting at a 6% rate right now, then you might be better off with a cash out refi, because there is no question you are going to refinance the whole thing.
Actually, when did he close?
Yeah, when did you close? That's a big one. And what is your current rate? So that's a part of the factor. Remember, all of this stuff there's a lot of math. It's not one simple thing. People are like, hey, best interest rate. I'm like, no, it doesn't work that simple. They're like, hey, I'll go with you if you give me the best interest rate today. I said, how about this? How about I plan long term and I show you the better overall picture?
Yeah.
Because some people, I did one last week where the guy's like, hey, I have this loan built at 6.5%, built at 6.5, and we can lock it at 6.5. And then he said, Lee, okay, before we do that, I want your advice. And I looked at it for a little while, and I said, my advice is you lock at 7.625. And he said, wow, that's a big difference. Justify. He was an engineer. He said, justify. And I said, okay, cool. Here's what it is. If you locked at 6.5 today, it would cost you $3,000. Okay, $3,000. But if we locked at 7.625, we would actually give you $3,000 back. So instead of spending $3,000, you keep that $3,000 and we give you $3,000. So there's $6,000. You close the loan. Every month, the mortgage payment is $100 more a month. But you have $6,000. $6,000 divided by 100 is 60 months. There's no question at that rate, at 6.5 or at 7.625, that you're going to refinance. You're going to refinance. When the rates get better, you're going to. It's just math. So if you're going to refinance and you know it and you made $6,000, you now have 60 months or 5 years wherein to refinance, and you will be ahead. After 5 years, you'll be behind. But if you do it before 5 years, then you're way ahead. So I actually believe you're going to refinance in the next 12 to 18 months, and I believe you're going to be in the 4s, maybe even the high 3s, and you're going to buy it down at that point. At that point, it makes all the sense in the world to buy it down. But today, if it were me, I would lock at 7.625.
There you go.
Gave me about 2 minutes of silence, and he says, your math checks out. I agree with you. Lock 7.625. Now, that's somebody who actually understood the math and wasn't just looking for the best interest rate. There's a bigger picture always. Anyway, keep going.
So, Michael Chase, back to your situation. So here's the thing. You're asking a very simple question, but in our brains, there's a lot of different ways to go. So if you came to us, what I would actually do, and it takes more time, I'll be honest with you, I would go, okay, what does it look like in a second? Let's build that one. I don't know. What does it look like on a HELOC? Let's build that one. I don't know. Let's do a cash out refinance. Let's build that one. Oh, that one actually makes more sense. It has the lowest total payment, blah, 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 blah. So that's what we would do. Takes a little bit longer, but we actually care about your process, the interest, and how it is in the end. Because we want you guys coming back. We want you guys to be happy. We want you guys to refer us and say, use Chris and Lee because they're amazing. They gave me the best avenue and they did all this work. It takes a little longer, but it's better for you guys. Also, if you have credit challenges and you know you have credit challenges and you know you're not going to get a loan, go up top to our link. There's a link there to fix your credit. You can go straight there and start that process. Because there's 3 things to a loan, guys. It's income, assets, and credit. And one of those is always jacked, okay? And it's usually credit. It's usually credit because as kids we make mistakes and we don't always solve them right away. And then we want to buy a house and now we have this challenge that we need to solve. So go up top, get yourself started. Just want to kind of put that out there because you can start that now without talking to us. Sonny said you would hold the second position, but I don't know what they're talking about.
Probably the HELOC or second mortgage, but yes, it's a second on the house.
Always. And then Jules said, should I pay off each credit card or pay a lot on each? But she didn't ask a credit card question, so I'm confused.
Okay, Jules. So real simple. It depends on what you want to do. There's a guy out there named Dave Ramsey, and Dave Ramsey has this method for paying things off, and it works if you're in a certain part of life. If you're trying to buy a house, though, you want to aim for the highest mortgage payment, the highest monthly payment, because that's going to give you more buying power. So in that situation, Dave Ramsey's way of doing things is not a good way for mortgages. However, if you're not trying to buy a mortgage, I can see a vertical where Dave Ramsey's way works. So in his way is find the highest interest rate and pay that one off first, which is smart. But if there's something that is a low interest rate, but it's really eating up your buying power, you go to the buying power first. So it's a case-by-case situation. There's not one fix-all for everything. And you do have to actually understand the numbers and get somebody who can explain it to you. If they just say, well, I heard that's what Dave said, that's probably not your best option.
Well, we have a mega fan.
Okay, cool. Who's a mega fan?
Robbie Rob is our mega fan. These guys are trying to make money off of you. People, they're not here to help you.
Oh, Robbie Rob got us. Oh, you were right. Oh, dude. You think they're going to learn that we make a commission?
I don't know. I hope they don't find out.
You think they're going to figure out that we're not a charity?
I hope they don't find out.
Oh, come on, man. Dude, Robbie Rob,
do you think they're going to know we work for a living?
Oh, my God. Oh, shit. Dude, we've been outed.
They're going to know we don't work
We've been outed. We've been outed. Robbie Rob, dude.
Mega fan.
Man, I don't even know what to say right now.
Sign
You've got me tongue twisted. Robbie Rob, they're trying to make money off of you. Oh, my God. Anybody who's out there who hasn't figured this out, we just got to back off and tell you Robbie Rob has outed us. We do make a commission. We are trying to make money off the loans we fund. Yes, Robbie Rob, you got us, man. You know what? When you're got, you're got. That's what it is. Yeah. All right, cool.
Woo, CE.
Thanks for the info. Loving the channel. Thank you very much, CE. We're here for you.
Clips.
Y'all need a copyright. Is that same guys last time?
Yeah.
Is it? Okay, cool. What's up, Clips? Good to see you, man. Jules
need a
says,
copywriter
bah.
Or a salesman.
Or a salesman. I'm in Idaho. If you want to be a loan officer, it's a career. It's not a quick, hey, can you give me a job as a salesman? It's a career. And you have to really know your stuff. And my biggest piece of advice to all you brand new loan officers, pick a good mentor. Don't go after the basis points. Because once you become a loan officer, you're going to find out you can make 300 basis points at a lot of places. That's 3% on every loan. $500,000 loan, you make 15 G's. But if you do that and you don't have a good mentor, you will not last in this business. Actually, the guys who last, they don't take half that. They take less and less and less because they know that it hurts their client because of the interest rates that they have to charge in order to get that 300 basis points. So If you're brand new, make sure you get a good mentor who can explain this whole picture to you and make sure they know their shit. And the way you can tell is question the hell out of them. If they can't answer questions, they don't know. They're faking it. There's a lot of people in this business that are faking it. They don't know what they're doing. Anyway, back to you.
Clips, give me a good sales pitch.
Yeah.
Phone number's right here.
Yeah.
Text me
Yeah.
a good sales pitch as to why I would want you as a salesperson or a with a copywriter or anything that you do. Give me why you're valuable.
Yeah.
Tell me why you have value, and I'll talk to you. Keith, 29.
Yeah, bro. Ready to
Good
kick
morning,
ass and take
fellas.
name.
Team
What's up,
Sanchez.
Team Sanchez? One of our
Early
favorite.
bird gets the worm. He
Early
knows we're an
bird.
hour
Yeah, he
early.
knows we're an hour early. Yeah, he knows. Chris says, hey, you want to try an hour earlier, see if we get a different audience? I'm like, last time we did that, the audience was different on Facebook, YouTube, TikTok, Instagram. They're all a little different. And he says, yeah, well, why don't we do that and then try another one in the afternoon? I said, you know what? If you're game, I'm game. Let me move this loan aside, and we go forward. Yep. So here we are.
Yes, Clips. We do digital marketing as well. If I sell my house, how long do I have to wait to get a first-time assistance for the next house?
Good question.
Very good question.
So first off, you should know that the first-time home buyer program, there's only really 2 or 3, and they're not even that great. They're not bad, but they're not that great. It's Home Possible, Home Ready, and with those, you can go conventional 3% down. However, people confuse that with FHA. They think, hey, well, if I'm not a first-time home buyer, I can't get FHA. Yes, you can. As long as it's your primary residence, FHA. The answer to your question is 3 years. If you can't have owned a home for the last 3 years in order to qualify for most first-time homebuyer programs, except for Dream for All. Dream for All is how many?
7.
7 years. Dream for All
That's a long time.
That's a long time. Dream for All is a crazy program in California where they'll get you 20% of your down payment. They'll get it to you. It's a catch. All down payment assistance programs are some version of a catch. So if it's a $500,000 house, they'll get you $100,000. They will get it to you. But when you read the fine print, they want it back. They want that $100,000 back. And they want it with appreciation. Yeah, not just interest. They want to share in your appreciation in the state of California. So they want their $100,000 back and they want appreciation. Now, did they really help you? Kind of, yeah. But did they give you money for free? No. They want their money back. All of the down payment assistance programs have some type of catch to them. So, hope that answers your question. What do you got?
Okay, Team Sanchez, I sold my car. How long does it take to be removed from FICO? I don't want it to count against my refi. So, the answer is they normally update on the 15th of every month. So, if you paid it off on the 1st, if I paid it off on the 1st, it'll get updated on the 15th. So that's usually, but every investor is a little different. If you do the refi through us, we'll actually do something called rescore.
Yep.
So you pay it off, you show me a zero balance letter, I'll send it up to the bureaus, they'll force the update, and it's updated now, and everything will be good.
Because we're in finance, we have the ability to challenge the credit agencies. If you show me something that says paid in full, we don't have to wait for it to go through the cycle of 90 days. We just go, hey, we're a lender, here's our number, here's the proof that this is paid in full. Fix it. 48 hours later, comes back fixed.
Yeah, about 2 days. A lot of questions down there. We're going to get to you
We're
guys.
Gonna get
don't
to you
leave.
guys. Don't leave.
We're going to get to you. We're
Dude,
not ignoring you.
don't leave me. I hate you. Don't leave me.
Jonathan, buying a home to rent using
DSCR.
loan.
Yeah.
What should be the next step? Refinance or USEA HELOC? UREA HELOC. I don't know what that means.
USEA HELOC. So, buying a home to rent DSCR. First off, if you qualify for the DSCR, good for you, man. It's a very difficult thing to qualify. We get tons of people who are like, I'm a real estate investor. I want to start buying with not my own money, because I saw a lot of commercials on TV that you can do that. It doesn't work, by and large. It doesn't work. And I can really rip them apart. There's an occasional one-off, like the guy who goes to Vegas, who occasionally wins. That does happen. So you can't go to Vegas thinking, hey, I'm going to be the winner. No, you got to understand the math, and maybe you're the winner. Maybe. But more than likely, you're not going to make it. So anyway, the DSCR loan, congratulations on getting approved for that, because that has the debt service. After you do that, if you're trying to HELOC, that's going to be a difficult situation, because it's a DSCR loan, and the equity is only the 20% that you put in. Maybe the appreciation, but usually you would refinance out of that. So it's probably going to be conventional conforming investment property if you're going to refinance, because the DSCR loans are way higher than Fannie Mae, Freddie Mac rates.
Here's the other thing. So the reason why you usually do a DSCR is because you can't or don't want to prove income. So when you refinance or get a HELOC, you're going to have to do that. So why would you have done a DSCR from the beginning when you could have had the financing done the right way from the start?
Yep.
So I'm a little confused, but he's right. If I sell my house, how long do I have to wait? We already did that one?
Yep.
It's for a builder. Christian Wilder, I don't know what you're talking about when you say it's for a builder.
It's for a builder. Give me a second. Maybe I'll remember. Nope, don't remember.
Okay. Hello.
Christian, tell us. We'll talk some more.
Rena Forever Love. Hello. My lender gave me a pre-approval, and I'm excited and executed a contract and paid earnest money and got the seller gave me $5,000 and now lender is trying to back out.
What? Rena.
I have $130,000 in income, credit $592.
Oh, you know what that sounds like, Rena? It sounds like your loan officer did not vet you.
They blew it.
And they blew it. And the reason they're trying to back out is because you were never qualified. I don't know that for a fact. The only way I can know. But I've seen enough loan officers who don't know what they're doing and they don't want to lose the client. So they'll give you what's called a false positive DU. Because DU, that's desktop underwriter. If you put in data, it'll take the data that you put in and it'll spit out something. However, if you're doing this right, if you're with us and I say, hey, you got a 592 FICO and great income, I would say, cool, I'm going to send you through a TBD underwrite. Why? Because I want you to be fully underwritten before you go shopping with a 592 FICO score because I don't want this to fall out after you dropped your EMD, you enter a contract, your hopes and dreams are on this home, and then it falls apart because a loan officer didn't do their job.
Damn.
Sorry.
All right. Rena, call us. Let's solve your problem.
Yeah,
yes, that scenario we can do.
And we've actually helped people from this platform with that exact scenario. And builders, we've taken a lot of people away from a builder and builder's lender anyway. And we either fund the build or put them in a different house. Both of those scenarios happened. We closed on one probably 2 days ago that we just did that.
You know what that means?
What?
Time for a commercial.
Oh, if you need a badass loan, call Badass Loan Officer. You can reach your badass loan officers at New American Funding by calling or texting this number right here. It's going to disappear in 5, 4, 3, 2, 1, bye. Cool.
If I apply through y'all, how long will I get a pre-approval or not? How long will I know if I'm pre-approved or not?
Okay, so Aaliyah. Oh, that's pretty. Aaliyah. Okay, so Aaliyah, if you give me all the documents, and I mean all of them, not, hey, W-2, I'll get you the rest of my 1040 later, or here's the front page of my 1040, but I didn't get you the other 3, or here's one page of my bank statement. If you give me all of the documents, I can have you usually qualified in 2 to 3 hours. All of them. Now, if there are hiccups, like for instance, you had a gap in employment and you only worked at this place for the last 5 months, but you worked at another place and you worked at another place and somebody bought the company, well, then I have to do something called VOEs, that's just called verification of employment, because I have to prove that you have been employed for the last 2 years, and that might take days. That might take as much as a week to get VOEs from multiple employers. But if you have the same job for the last 2 years and you give me all the documents, let me say that again, all the documents, it's actually pretty quick. But the people are always saying, hey, listen, I didn't file my 2022, so I gave you 2023 and 2021. Can't do anything with that. Can't. They're like, well, can't you just take what I make off my paycheck? No. There's a process to this. And then I'll say, get me what you can. And you know what? You go to the bottom of the pile because somebody else is in front of you. And then when we finish all those people that gave us, we go back to this and say, hey, did you give me the documents? And a lot of people just stop. And that really is life. That's how it really happens. So if you give me all the documents, 2 to 3 hours.
There you go. Same thing for you, Rena. I did see that you're going to give us a call. Mm-hmm. Text us right now and tell us that you're the one that's in trouble that needs help. Yeah. We'll make you an absolute priority. Always Shandley?
Always Shandley. That peach shirt. Is that me? Yep. Peach.
That's not a compliment.
It is.
Robbie Rob's laughing at you.
Okay, Robbie Rob.
I'm buying a home. How do I win? How do I win? Who is financing versus someone that is paying cash versus fool?
Me. So he's just saying, hey, if he's financing.
I'm financing. How do I beat a cash person?
How do I beat You tell him. You tell him. That's your favorite.
You want me to tell
That's your favorite.
Then we have you buying cash.
Yeah.
So what we'll do is we'll get you pre-qualified. We'll send you to underwriting. Underwriting's going to go through it, and they're going to go, of course we're going to let this person borrow hundreds of thousands of dollars. Chris and Lee package this, okay? Then they're going to approve it. Then they're going to send it to our NAF cash department. And we're going to get a concierge. And the concierge is going to look at it and go, of course this person can buy in cash. Here's the money. Realtor, they're going to give your realtor the pre-approval to put in an offer in cash. So now you're going to put an offer in cash. You're going to beat those other cash buyers, and then you're going to get into contract. So that's going to wrap up in 7 to 20 days, something like that, depending on what your real estate agent negotiates. Then you're going to close. Then you're going to move in if you want to, and then we're going to do the regular financing for you, okay? There's no hidden agenda here. There's a small fee for doing that, but you're going to win the other offers, okay? A lot of people were dealing with this same exact scenario during the C word, okay?
Yeah.
2020 and 2021. So this is why we created this, because there's going to be a lot of offers coming in starting when the rates start dropping. It's already started, actually, and scenarios just like yours. It's called NAF Cash. It's proprietary here. Not everybody has it. So if this is something you want an opportunity in, you know who to call.
You're buying cash. In that situation, you're buying cash.
This will fix your scenario.
Cool. Christopher, thank you for following.
Yeah.
Robbie says, what? Really? I don't know what you're talking about, Robbie.
He's a mega fan.
All right, cool. I almost stopped following you guys as soon as I heard Dave Ramsey said, LOL.
Team Sanchez.
Yeah, Team Sanchez. So so these gurus that pop up, all these super financial gurus. Now, bear in mind, I got my first license in 1992, so I've been watching finance forever. So I've seen Dave Delgado. I've seen all these Carlton Sheets guys. I've seen all these guys. A guy named Tom Vu, hilarious guy way back then. I remember Don Lapre. Oh my God, this guy that talk like this, and you would be famous and rich. And I've seen all of these guys, and I watch them, and I try not to just push them aside. So when I see Dave Ramsey, I'm like, okay, is what he's saying solid? And what he's saying is sometimes solid, sometimes. But it's also like this one little girl. I'm going to test you to see if you know who it is. She was a waitress. She was a waitress. And she became a financial advisor. And she was a waitress. And do you know her name? Do you know her name?
Yeah, I do.
Do you? Tell me.
She's one of the Shark Tanks.
No.
Not Barbara?
No, not Barbara Cochran.
Do I know her?
Yeah, do you know who I'm talking about? If you don't, her name's Susie Orman. So anyway, Susie Orman was a waitress, and she started learning a little bit about finance, and then she started professing finance, like she actually knew it. And sometimes you can say, hey, things are good. Like if I told you today locking a 6.5 is better than locking a 7, well, on the face it sounds good, but if you're really looking at the big picture, it probably doesn't. I can give you reasons why it doesn't. But you have to be more than a one-level thinker in order to figure that out. So when I look at Dave Ramsey, I'm like, is your advice good? And I say, you know what? For a tiny part of the population, I think it's good. I think it's good. Yeah, I do. But if you take the big picture in, I don't know if it's so good. Some of these guys say a home is not an investment. They think buying a home is a bad move. So I backed up and I'm like, hey, is that sound advice? And their justification is usually opportunity loss and the fact that you'll get tied down into one area and you can't move. So from that perspective, I'm like, yeah, that kind of makes sense. Kind of. But the average American is not going to save any money. So the biggest investment that they have that's going to appreciate is going to be a home. So if you look at it from that angle, then their advice is foolish. So anyway, Dave Ramsey, he gives some decent ideas that you should consider, but I would not follow anybody, not even Chris or Lee, as a guru. Not anybody.
Me and Tony Robbins, not your guru.
Not your guru.
Hi, I'm looking to buy a house in California, but I don't have money for down payment. Any assistance programs?
Yeah, there's a whole bunch of them. We can give you a Cal Halfa, we can give you a Shadap, we can give you a Sapphire, we can give you a Platinum, we can give you a Home Ready, we can give you a Home Possible, we can give you a Shinoa. I can keep going, but
keep going.
Yeah, keep going. So, but they all ride on an FHA loan or a conventional loan
or a VA.
Or a VA loan. Sorry, VA loan. USDA? No, you can't.
Yes, you can.
Yeah, okay, you're right. That's right. You can. So all USDA. So we have to get you qualified for FHA, VA, USDA, or Fannie Freddie first, and then we plug in the program. Yes, we can help you. Call us.
Here's something cool, guys, and I'm going to try and brand this. I want you guys to learn it so you guys can tell me when you need it.
Okay, cool.
I'm going to call it the Chris and Lee 1, 2, 3.
Oh, dude, that's fucking
Here's
high
what
tech.
it is, okay? 1, income. 2, assets, 3, credit. Chris and Lee, 1, 2, 3. Okay. So if you have trouble with income, we've already given you guys a solution on how to make more. We've created side hustles, and we'll teach you how to do them. 2, assets. So you don't have down payment? Guess what we have? We have programs that will help you with the down payment. 3, credit. If you have shitty credit, you don't have the best credit, or you just want better credit, if you go to the link in our Stand.Doc store up above, there's a place where you can go to help you fix your credit. So income, assets, and credit. The Chris and Lee 1, 2, 3. If you have any challenges with buying a home,
I kind of like that.
If you're a kid fresh out of high school, you get on the Chris and Lee 1, 2, 3, you'll have a house in 2 years. So that's our thing. We can solve all the problems. You just need to tell them what they are. Tell us what they are. SMA is the Dream for All loan program. Good is in California. So here's what the Dream for All program is. It is a very strange, very difficult program that loan officers are writing like it's the best thing since sliced bread. They're out there saying it's amazing. Let me tell you what it really is, okay? So the Dream for All program is a CalHFA program that in order to qualify for, you can't have had a home in the last 7 years, and you have to have an income below, I think it's $188,000 in most areas. And it sounds like they're going to give you 20% down. They're not going to give you 20% down. They're going to get you 20% down. So if you buy a $500,000 house, the state of California is going to get you $100,000, and you're going to buy that $500,000 house, and you are now in business with the state of California. Why? Because they want that $100,000 back. They're willing to wait. They got no problem waiting. But during that time of waiting, as your home appreciates, they are taking their share of the appreciation. That's right. They want their $100,000 back plus appreciation. So you don't fully own that home. You are in business with the state of California, and you both went into the investment business together. You both are investing in real estate. The only way to get California out of it is to sell the home, and then they get their $100,000 plus shared appreciation back. Guess what? They have first out, which means they get paid first. If you don't land up with money because of fees and commissions and everything, so what? Too bad. We tried. We want our money first. They want first out. Now, there's a little provision that says if you've been poor for the last 3 years and you can prove you've been poor, they'll take as low as 75% back plus appreciation. So, is it a good program? Well, if it means the difference between you could never buy a house and you do own a house and you do have some appreciation, and instead of paying somebody else's mortgage, you are now paying your mortgage, then I think it's a good program. If given the choice between not doing it and I have the ability or doing it, I wouldn't do it. Okay. So, hope that helped. Yeah. There you go. There you go. iSimple3 said, "What? You guys make a living?
What? What? You make a living?
Silly, right?
I don't know. iSimple. iSimple. How many followers does iSimple have? Just real quick. 20. Oh, surprise. You know what the fun thing about this? I love the haters, man.
iSimple is our friend.
iSimple. I love you. I love you. I love you, iSimple. I don't know if you're a hater, but we do get haters in here. We got somebody in here that told everybody that we're just doing it for money.
That's what she's talking about.
Shock.
She's pretending to be shocked.
Shock. That we're doing it for money. Hey, yeah, we make a commission off every loan we close. Hey, another thing you should know, if we don't close any loans, we don't make any commission. Oh my God, that makes us scammers or businessmen? I don't know, but I have a license. NMLS 944254. What's yours?
1066958.
See, we have to know our NMLS numbers and we have to qualify for them every year. So we're here for you.
Bailey Wilson, how much could I buy in Ohio with $51,000 salary, no debt, 724 experience, 750 Equifax?
So your 51K is going to probably put you somewhere in the neighborhood of 250, 260, 270. It's going to depend on tax base and insurance. Tax base is a very big thing. In some parts in Texas, I'm closing one with 2.97 tax base. That's a lot. And I'm closing one in Northern California, 1.2 tax base. So the tax base is a big difference. The difference on that monthly is $300 to $1,000. That's a lot of buying power. So it's going to depend where you buy, tax base, and a few other things. Call us, we'll help you out.
We got the answer.
Cool. See ya.
Nope. It was Who Killed Kennedy?
CIA.
CIA.
I think you might be right, but I think so. Here's something crazy about that. Oh, I'm about to lose our followers. I'm about to lose you guys because I'm going to say something controversial. I'm about to say something controversial. So Politics. I follow politics. So President Trump, before he got into office, he said, hey, listen, when I get into office, I am going to release the entire Warren report, unredacted, the whole thing. It's going to happen. And then he got in office. And he says, he looked at it and he's like, I can't release this. I can't. Now, you have to think, a guy who is about as controversial as you get looked at some paperwork and said, no way in hell I can let this out. I know it's true. I know what happened. But there's no way in hell I can let this out. So he released some, but still redacted a lot of it. And everybody that was waiting for this said, hey, wait a minute. That doesn't jive with your promise there. So what happened? Now, there's a guy I follow called Judge Napolitano. He's great. Judge Knapp says, hey, listen, I'm President Trump's friend. I asked him, I said, hey, how come you said you were running and you were going to release this, and then when you actually got in office and you had the power, you didn't do it? And President Trump said to Judge Napolitano, he says, listen, Judge Knapp, if you saw what was in there, you would not have released it either. And Judge Knapp says, I knew not to ask any more questions. And that's a true conversation. You can see that on his podcast, by the way. And I said, whoa, what is that bad? Maybe CIA? I don't know.
Maybe.
Can y'all be my mentees? Maybe. You got to be good. Simple. Simple. If you're really good. Yeah, we look for Padawans all the time.
Any California down payment assistance programs or grants you recommend? We just went through a bunch of them right now. The answer is yes. We have a bunch of them.
Yep.
You need to call us so we can get you involved in them, okay?
Yep. Cool.
Esme, you already answered that one.
Yeah.
Rena Forever. I'm calling you guys about it. All right, we're here, Rena.
We're here for you.
Do I get a hat if I qualify to purchase a home with you guys?
Would you buy my hat?
I get you a hat if you get into a house.
Close in escrow.
Get into a house.
Close in escrow.
I get you a hat.
Yeah.
Melanie.
Yeah, that's a different
Zero
way.
mortgage insurance? You have any of those programs?
Zero mortgage. We could. Yeah, there's.
I got it.
Yeah. Okay. Good.
You put 20% down. I guarantee no mortgage.
No mortgage insurance.
You heard it here first.
No mortgage insurance. None. Go
first.
VA.
No mortgage insurance.
No. How about USDA?
No mortgage insurance.
Holy smokes, that's a lot of options.
So there you go.
Cool.
Minnesota.
Can we do Minnesota?
Heck yeah.
Can we do all 50 states?
We could do it in Minnesota. We could do it in Sarasota.
Yeah. The girl from Shark Tank. No, he thought that was the same thing too. That's Barbara Corcoran. She's badass. But I was talking about a girl named Susie Orman. Susie Orman was this weird financial guru that resonated with blue collar people. And she was giving sometimes okay advice, but just crazy. And if you pushed her, she couldn't answer. She would fall apart. So, but they packaged her and they marketed her and they used her and then they moved on.
Was she hot?
Kind of, but in a weird, it's weird.
Esme, can you talk to a lender to get a plan for your finances even though you don't plan to buy for another year? Yeah, I recommend that.
Yeah,
I think
good idea.
You should. Absolutely.
Absolutely.
So if a loan officer tells you, if you're not going to buy in a year, come back to me later.
Yeah.
You come to us.
Yeah.
You come to us because we're going to put your plan together now.
We are going to pull your credit, by the way. If you say, well, I was thinking about it, but I don't want to pull my credit, we can't go anywhere because we don't know anything. We're going off your story. We can only go off the facts. I've had people who say, hey, listen, I'm thinking about buying a year. I say, cool, let me pull your credit. We stand. Well, I'm not ready for that now. And I'm like, cool, do you have any guideline questions? And they're like, well, what can I get? I don't know until I pull your credit. I have no idea what your problems are. I have to calculate your income. I got the 3 legs to a loan: income, credit, assets. If you're having problems with any of them, I can work with you. If you got problems with income, we can either get you a non-occupant co-borrower, a co-borrower, or a side hustle where you can make some money. If you have a problem with FICO, we can teach you how to fix your FICO score, send you to credit repair, tell you what to do, give you some advice. If you have a problem with assets, we have down payment assistance programs. We can help you with that. But if you're just kind of guessing a year from now, I got to pull your credit. I got to pull your credit to find out exactly where you're at to give you an exact plan.
All right. Team Sanchez said they didn't let him release it.
Team Sanchez. I don't know if I don't think President Trump's under that. He's just this weird lightning rod, and I think he's necessary for this part of the United States or humanity or something.
Time traveler,
he's just
man. Of course
weird.
he is.
It's so weird. It's so weird.
Because people are like, Simpsons?
I saw him on The Simpsons. I saw him on The Simpsons when it happened. I was like, because when I grew up around the time when Trump was getting rich, and I read The Art of the Deal when it came out. And The Art of the Deal was a pretty damn good book. And I remember the story of the Woolman Rink and how he went up against Ed Koch back then, and he was negotiating against Merv Griffin, who was a gigantic real estate investor. And he gave these stories, and I was like, this guy's solid. This guy's solid. And then I watched him go, and then I watched The Simpsons go, he's president. I'm like, he'll never be president. And then, whoa, 20 years later, he's president. What? So it's just a weird situation. Anyway.
Andrew Schaub, can we talk about the pros and cons of an FHA loan?
So, pro.
Hell
I can push the back end ratio, which is your PITI plus revolving debt, to 56.99. And I
I'll
can
do the cons, you do the pros.
Okay.
Does your pro, I'll do a con.
Okay.
Has mortgage insurance for life. Go.
The pro is if you put more than 10%, you don't have mortgage insurance for life.
Con is it's only for first-time home buyer. Oh, no, I'm sorry. You can only do one at a time. There you go.
Yeah, I was going to say, yeah, it's only for primary residence. It is for your primary residence. 3.5% down.
Dude, you're the pro. That's not. You just said the con.
No, that's a pro. 3.5% down.
Okay.
3.5% down is a pro.
Okay.
Dude.
No, you said has to be primary residence. That's what I got. Anyway.
3.5% down, and most first-time home buyers use a FHA because the underwriting is easier. It's lighter. It's easier to get through. So, yeah, that's the pro.
That's
more cons?
it.
Yeah.
Not a whole lot.
Yeah. Oh, lower FICO score. Lower FICO scores. They're more forgiving with your FICO score. That's the best word. More forgiving.
Loan limit. It has a lower loan limit.
Lower loan limit. Yeah, that's a con. Yeah. But the truth is, if you have a high FICO, 800, you'll probably go conventional anyway.
Okay, I think we already answered this one. But if I sell my house, how long do I have to wait for a first-time homebuyer assistance for the next house?
3 years is the rule, except for Cal Have a Dream for All, 7 years.
What's the minimum credit score you recommend for exploring purchasing a home? Asked Shawnee.
Well, we need to know what your credit score is. So 580 is FHA starting. But if you don't know if you have a 580 until you have your licensed loan officer pull your credit. At that point, you'll know.
All right. A down payment of 20% or less. You need to pay mortgage insurance.
Robbie Rob says right.
No, that's incorrect.
Well, wait a minute. You can
20%. You have mortgage insurance. He's at 20% or less. So it's less than 20%.
Mm-hmm.
So at 20%, you do not have mortgage insurance. At 19.9999, you do.
And Robbie Rob, is he the hater?
Yeah.
He's the hater? Okay, so Robbie Rob, you can do an 80-10-10. Ooh, what's an 80-10-10? Ooh, let's say you're buying a $500,000 house and you only have 10% down, but you don't want to pay mortgage insurance. You hate mortgage insurance. I don't ever want to pay mortgage insurance. And I don't even have the other 10%. We can do an 80-10-10. We have LTV, which is loan to value, and we have CLTV, combined loan to value, which means I can take 10%. I can go finance the other 10%, and now you have two notes. I have to combine these two into what's called CLTV, and you have no mortgage insurance.
Booyah.
Technically, you put 10% down. That's called an 80-10-10. Can we do it?
Mm-hmm.
All day long.
Henrietta, you're going to love this. Henrietta, I want to buy a house, but I'm on SSI. What can I do?
You tell her.
You can buy a house. That's
maybe,
what you can do.
Yeah, maybe.
So SSI is usable income. Social Security is usable income. Social Security disability, unemployment. All these incomes, as long as we can put a story together and there's consistency, we can use this income to buy a house. Will you qualify is the question. So as long as you have a 580 or better credit score and you are receiving this income and you can prove it, let's see how much we can get you.
And it can't be temporary. It has to be permanent.
We can use temporary. Just as long as the permanent's going to come.
Oh, okay. Fair enough. Yeah,
the problem with temporary is it's less. It's way less than what you normally make.
Yeah, and if you go back to work because you're on temporary, they want the work.
Time for a commercial.
Yep. If you need a badass loan, call Badass Loan Officer. You can reach your badass loan officers, Chris and Lee, at New American Funding by calling the numbers on the screen. It's going to disappear in 5, 4, 3, 2, 1. By disappear, I mean go down to the mic. Okay, cool.
740 credit score, Henrietta, you're golden. You need to call us. You need to screenshot these numbers. And are you ready to go, man?
You know what? We should do rapid. Do we want to do rapid? Do we have time for rapid?
That's it.
You know, we got it on Facebook, Instagram, TikTok, and YouTube. We appreciate you guys. We are trying to get you a house in 2024. We've been Chris and Lee. We are out.